Hey guys, welcome back to my channel. This is MatrixFX. So today we are going to do a breakdown of a trade I took on Friday, being 18th of November 2022. So without much delay, let's hop into it, guys. So we're starting from the weekly chart. Now on the weekly chart, you can clearly see that this was my weekly objective. This other block right here, it was my weekly objective, and I quantified the weekly data to get my premium and discounts. If you are very familiar with ICT concept, you know what I'm talking about. It's my premium and discount range. So that aside, that this is the other block in the weekly. This line, I think it was another block from the daily chart, something of that nature. So now obviously you can see that on a Tuesday the market traded to my objective. On a Tuesday I was really hoping for the market to be, persuaded, or should I say manipulated till maybe Thursday, Friday news to then get the trade to the other block. But unfortunately it actually happened on Tuesday and I cannot really do anything about that, so I had to go on. But sincerely, I was really pained because at that moment, after the market traded to the objective, I was left without a bias for this particular currency pair. So I was then busy trading exotic. So but back to this. Now I think we're done with everything on the daily. On the hourly, now on the hourly, what I did was the previous day high, which is previous day high. Let's note that previous day high, the previous day low. So with this range, what I just did was, this is weekly open, just so you want to know. What I did was that I drew my premium to discount to know where I was. So after getting the premium to discount, I noticed something, that this right here is another block. So the trade we want to break down is actually a trade I took in the early London session. So I wasn't opportune to be present in the market throughout the day because I was really busy. So this trade was just like a very quick trade I took, just a very quick scalp. I think it 1 to 3 R, 1 to 3 RR. So it was a very quick trade. I just wanted to get the 3% and go my way. I didn't want the market to just take all the profit without me, if you know what I mean. So I think let's label that other block OB. Now if you notice, the other block is in the premium, so I want to sell it back to discount because my intention of the whole trade is that I'll just sell at premium, buy it back at discount, which is close the position, with the intention that if I was available, then I'll buy it back higher because I was expecting it to be a bullish close day. So I think that's that for the hourly charts. And to the 15 minutes. Now if you are very fond of ICT, you know that his other block will start. If I still wanted to note another block to start from here, but based on my own personal experience, I don't know, but based on what I have seen in the market, based on my at least level of backtest and everything, I would have taken this, which is actually the one I took, this other block here. Sorry. So this was where I think I sold around this area and closed my position right here. But don't worry, we'll get to the trade in a moment. So this was my target. Now if you're very fond of ICT's concept, or even ICT aside, as a trader, before you go into any trade, you're supposed to know your entry, your exit, your stop loss, your take profit, so that you're able to weigh the trade if it is worth the risk, if you know what I mean. So in this particular video, or in my current trade in general, I have been using the 2022 mentorship entry technique. So I'll just break down the one I use here because I have, I think, two techniques of using that particular concept. So the market traded to the order block at the premium during the Asian session. So what I did was, notice after this occurred, let me just note that you can see the wicked rejection from the other block, very wicked rejection. You can see the wicked rejection for the other block that led to a break of structure. Led to a break of structure. Anywhere you want to take your break of structure from, if it was on the body, no problem. From the week, no problem. But this is the 15-minute chart, so I will take the week. Break of structure. Sorry. Okay. Now we have noted the break of structure. Now we'll get our premium to discount of the leg we want to enter from. So what I normally do is I measure from the body. I don't measure from the wick because there's more price action in the body, so I measure from the body. So from that body to this, you notice the 50% level. Since we are going to sell from the premium to the discount. So we're selling from premium to discount. Now we want to look for anything above 50%. This right here is the 50%. I don't know if I'll get to that, but this is the fair value gap we're going to be selling from. I think let me use a fib instead. Let me use a fib. So from the fib, take from there to there. So clearly you can see that this is above the 50%. I think this is just inside the 61.8%, and I think particularly that was where I took my trade, not just from the fair value gap itself, but from that particular area. So mainly I saw this and I noticed this wicked rejection right here, and I noticed that it broke structure. I know that this will have a certain level of resistance that might just take me down here, and you can see that one symmetric price swing, but that is not the topic for today. So let's go back to the trade breakdown. Now, so where I took my trade from, from the 61.8%, just right here, and I think it was a 10 pips stop loss. Yeah. Don't worry, I will explain extensively how I got my stop loss. It wasn't just a random number. Remember my targets. So that block right here. So now let me explain deeply how I got my stop loss. Now, in the mentorship, ICT explained that whenever you have a fair value gap above your level of entry, your stop loss must always cover that fair value gap. Now, if you notice, this is a fair value gap right here. This is another fair value gap right here. So there are 3 fair value gap above my fair value gap. So what I did was that I just took this, it was actually 10 pip, yeah, the bodies of this candle. Sorry about that. Yeah, the bodies of the candle, that was where my stop loss was. So normally the market, sometimes it doesn't even feel the fair value gap above, but this is just to be on the safe side. And if you look at that, so the market traded through my entry, took me in, continued trading higher. At this moment I was still in a chart and I was like, whoa, did I enter a wrong trade or something? And as you can see, it was this actually supposed to be a 1:3 RR trade. I think, yeah, this is it. 1:3, I think, yeah, this is exactly where I got out. So At this moment I was like, oh god, I've entered the wrong trade, but to God be the glory. You can see the market traded back lower. Now for some people this might be their own entry leg. Let me delete this for a moment. For some people this might be their own entry leg. They might be entering from here. Some people that have gone down to maybe the 1 minute. And entered from here. You know, I know some of my friends who caught this trade at I think around here with little to nothing drawdown, and they wrote the whole thing down. I think it was like a 1:5 for them, something of that nature. Yeah, you can see it, a 1:5 for them. So they enjoyed the trade, but unfortunately for me, I was not opportune. My time for that moment was not really open for me to catch the move like that. So I caught the move the way I could. So got the move the way I could, which was like this. I just had to risk it like that way. But the people that took it here, it's still okay. Some people still came back and caught this other move down, but that's still the same thing. So basically it was a 1:3 RR. So that was how the trade went. After going in, came back, I was like, what's now going on? And I noticed that this is an order block. The market was simply coming back to tap this other block right here. Okay, I was simply coming back to tap that other block. Immediately I saw that, I know that I'm on the right side of the market. So immediately the market tapped that. I saw the rejection. I said, yeah, I'm on the right side. So, and the market traded down immediately, hit my take profit, and I just left the market. And you can see that obviously the market came back up to sweep the Asian high. I think I'll do a trade on my standard trading plan, or should I say my standard trading journal. So if I was to follow my trading journal, I'll be entering here and exiting here, or entering here and exiting lower, depending on how or when I come to sit for that particular day. But I think that will be a video for another day. So that's all, guys. I hope you enjoyed the video. Please, if you do, please like and subscribe, and I'll talk to you later.